Hi, welcome to the Market Alert for Friday, the 4th of November 2022. So yesterday's news, no relief from Powell's hawkish hangover, Tech Rex, VIX vexed, yield curve crushed. And this is the interesting bit here. Powell seemingly didn't give traders a reason to buy stocks yesterday, but didn't do enough to bring new levels of fear. Absolutely. I agree with that. The Fed-induced outflows extended ahead of the NFP while dollar soars. That's because the Bank of England increased rates. It did bounce after as well, the initial fall in the pound, and then it came back. US stocks and bonds declined following recent rate hikes. US stocks and treasuries declined as Powell's recent hawkish comments continued to reverberate across markets, while the Bank of England and Norges Bank also lifted rates. Yeah, we'll look at the pound in more detail. Like I say, the initial reaction yesterday was for the pound to move lower, and that's probably because it was the highest one-day move in interest rates of recent times. But I'm sure they've increased it by the larger amount. Certainly way back when Soros crashed the pound in September of 91. But anyway, when rates were a heady 15% we were paying on our mortgages in those days. Anyway, the main news for today is going to be the non-farm payroll numbers. They're out at 12:30, an hour earlier than normal. 197 is the forecast. The previous was 263. How this is going to play out, in my opinion, is this. They certainly want the number to be 197 or below for the market to move higher. Normally, given the current environment of raising rates, we certainly don't want to, if you want to be bullish on the market, you want a figure less than the 197. Anything greater than this, anything greater than the 263 will send stocks to the downside. But what the market will be hoping for is this. And once this is out of the way, there's nothing to stop the market from moving higher apart from a black swan event or something like that. Otherwise, there's nothing for the market to come down, as you've seen. Even with the 2 days of rate hikes, the market's held. It's pulled back a bit, but it's not selling off at this point. So it all hinges today on these numbers coming out at 1:30. More so probably the unemployment rate, but again, we'll just have to wait and see, won't we, when they released at 12:30. Gold-silver ratio continues to move to the downside. There was a lot of activity in the gold market over the last couple of days as well. But let's move on and have a look at the stock markets, and we'll kick off with the Dow. And starting with the Dow, we can see that yesterday the market, despite the rate hike from the day before, the market's barely sold off. It came back 38%, drawn from here. There back to there is 38% decline, and now we're looking at moving back to the upside. And if we get those numbers below the forecast, the 197, then you're going to see a massive move to the upside. They're really going to take advantage of this. We've got the Santa rally, we've got the bonuses, the bankers' bonuses as well for January, so they're going to try and pump the market as much as they can to the upside. Like I say, there's no reason. I mean, we all know that it should be tanking. But this is the manipulation of the markets now with algorithms and the high frequency trading. Not only that, but these algorithms now pick up comments from Fed members before you can even hear about it. So, there's as long as they can keep pumping the market to the upside, they're going to do it. So these are the upside targets. It's going to take some really bad news to change this momentum at the moment. So we've got a couple of days down, and we're seeing the demand coming into the market yesterday as well on this bar. The volume's greater than the day before. They're bringing the market back on the overnight as well. You can see it's already starting to head for yesterday's high. If it breaches this and the figures are good, we just continue to the upside. Even yesterday, we sold off in the first 30 minutes. We then bought back in the second 30 minutes, and then it was up until we got to the close when profits were taken, but down to the DP, and ever since then we've bounced off this area and we're heading back to the high of yesterday. In the German DAX, you can see the demand also in this market. Same picture exactly. The 89 will be an interesting area, but the DAX certainly lagging a bit more than the Dow, because the Dow is already through the 200. Well, it was through the 200 MA. It's come back below it. Let me just go back and recap that for you so you can see what I'm talking about here. Just go back to the daily. There you go. There's that 200 MA. So the Dow has gone back to the 200 MA, and you can see before we spoke about this earlier in the week when the market got back below the 200 MA, it continued down, but it's slightly different at the moment here because the market's ignoring all of the bad news. So back to the DAX, and like I say, you've got the same picture there. The only difference is you're not anywhere near the 200 MA, but there's, again, like I say, the analysis is the same for this and all of the markets, except for, as you can see here overnight, the German DAX has already got back to yesterday's high after a decline yesterday when Lagarde spoke at 8 a.m. She's actually speaking again today as well. I missed that off. So she's going to be out spouting a usual rhetoric at 8:15, and then the market moved up, and then overnight has followed the Dow futures moving to the upside there. 5-minute chart, you can see again markets moving to the high. It's already there. Let's just have a look at yesterday's market action in a bit more detail. So the futures markets moving lower, then back up, and then the cash market banging its head against the 200 MA when it was overbought, and then having to move south. Sat on the low, trying to come off the low. They went below the low, and then of course we had the news, the Bank of England news. That's why we didn't get much of a test, and then the market moved lower. But then by the time we got to the close, the markets moved up, and then overnight you've seen how it's bounced off the DP and already moved up 100 points in the DAX, and now charging through the high of yesterday. In the S&P, same thing. We're back at this retracement, which is a bit more than the Dow. We're back at 78% with demand, and we've come off the highs of the stochastic. The momentum's pulled back a bit, and on the upside from the high to yesterday's low, these are the upside targets for the S&P. So again, exactly the same sort of pattern. 30-minute charts, we've got the market lower and the first half an hour in the S&P, and then we're up. We trade back to Wednesday's low for the S&P before the close, and the market down back to Thursday's close, and then heading back towards the high, lagging a bit there compared to the DAX, which you've just seen is already through yesterday's high. Meanwhile, in the FTSE 100, also taken out yesterday's high already in the daily chart. No red bars, very, very strong. Again, moving to the upside. 78% does have the 200 MA in the way, but that won't be a problem if those non-farm payroll numbers come out far less than forecast. So 30 minutes for the FTSE, we went up, we came down, and then the announcement from Bailey, rates increased, which has been a positive for the market. Not normally, but they're looking for any excuse to move this market to the upside at the moment. Already through the high of yesterday and looking very strong in the 30-minute chart at the time of recording. In the currencies, well, you'd expect them to be battered. The dollar up again yesterday, down to the 50 EMA. We're back to just below. Well, I think it's a double bottom there, to be honest with you. Yeah, it's a double bottom at the 50 EMA through the fib retracements there to the downside. On the upside, if the market moves higher, that's what you've got, but it's all dollar dependent, of course, for the currencies. Yesterday we had a massive sell-off in the GBP JPY. We then put in that double bottom overnight, and we're now moving back to the upside. DP in the way and the 50 EMA there. Meanwhile, the pound yesterday lower as the rates went up. Normally it would go the other way, but the dollar taking precedence over this move strongly to the upside, forcing the pound lower. It already started to sell off as we looked in yesterday's market alert, so it didn't really sell off a great deal when Bailey made the statement and they released the rate increase, because it was already down a couple of 100 points. It was just another 100 that it put on there, and overnight it started to move higher. Stuck at the 50 EMA, which you can see there. Twice it's looked at it, and it's got the DP in the way there as well. So let's have a look at the US dollar. So in the US dollar index, the market moving higher for yesterday, coming off the lows. Let's just draw in some fibs there. We're at 78%, and the market is down on the overnight, which is why you're seeing a bit of support in the JPY and GBP. 30-minute chart for yesterday, you can see this moving strongly to the upside. Bit of a pullback there with the opening of the Dow, and then rolling over overnight as well back to the DP and the 50 EMA at the moment, which is trying to hold at this level at this moment. Meanwhile, silver continues to be sideways to higher, which you can see there, despite all of the dollar activity. There was the reaction yesterday moving to the upside, and we're already through yesterday's high, which you can see in the daily chart. In gold, you can also see that we've got demand. We've got a triple bottom there holding the market at this level, and we're up on the overnight too in the gold market. You can see this in the 30-minute. Yesterday, the market moved lower after taking out the close and the low of Wednesday. But once we had the interest rate news, the market then managed to recover, and we took out the 50 EMA overnight and the 200 at yesterday's high with a very big bar, and currently the market is sideways there for the gold market. Okay, that will do it for this one. Let's see what the market has in store today, particularly at 12:30 with the NFP numbers, and it will certainly be interesting if they're less than the 197, wasn't it, for those. Just have a quick double check. Yeah, 197. So 197, anything less than this, the market rockets to the upside, and anything greater than 263, the market is likely to go south. And Lagarde is out at 9:30, not 8:15. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.